Monster Beverage has proven itself to be the best performing stock over the past 25 years, and the company is on track to continue its monster rally. It has outperformed big competitors like Coca-Cola and Pepsi, and even some tech leaders like Apple and Microsoft. Barron stock pick writer Jacob Sonenshine is on the story and joins the panel now. Jacob, thanks for being here. So, put Monster in perspective for us.
It was actually in the 90s a bankrupt natural drink company, and the current co-CEOs actually came in the 90s and bought the company and said, you know what, we see what Red Bull is doing in what then was a new energy drink category. Energy drinks is caffeine and sugar and all this crazy stuff. And they said, we want in on this market. And they did that, and today the company is worth $60 billion. That is a lot more than what we got. Molson Coors, it's a lot more than Boston Beer, and it's almost 2/3 the size of Anheuser-Busch. How'd they get there? 40% annualized gain for the stock over a long period.
All right, so that's definitely impressive. How were they able to pull this off? This is just a beverage company. How are they different?
It looks like just a beverage company. They're a marketing company. Immediately, when those guys bought the company, they said, we're going to market this as a lifestyle, not just a drink. So they did that. They grew incredibly over the years. They're still growing. You know, it started out as a sports drink for mostly younger males. The use cases have expanded. You got students drinking Monster beverage to study late at night. You've even got households. Analysts told me households for parties are doing this. So there are a lot of use cases now.
This is not advice, by the way.
No.
So, Jacob, the company reported its earnings recently. The reaction was not good. I think the stock dropped around 5%. What did they say or didn't say that made everyone so concerned?
The earnings were actually okay. They just weren't resounding. The issue was that the stock came into earnings way up, as it often does, and the stock pulled back about 5% after the earnings. The revenue grew 14%. There was both volume growth, which is really key for Monster as people adopt it, and pricing. So they showed the strength of the brand. The earnings grew roughly in line with revenue growth. There was nothing wrong with the earnings. The stock was just very expensive. I think this is an opportunity for people to get into this stock.
So you must be bullish about the future. What do they have coming down the pike to sort of repeat this performance of the last 25 years? In
order to participate in what people expect will be continued growth of energy drinks, they need to innovate products. They're doing that. They have zero sugar products. They are trying to sell more to women. Traditionally, therefore, just a general male demographic. In order to do that, they're also getting a hard seltzer. In order to do all these things well, they have to continue to market it as well as they always have. And those two co-CEOs, they're still there. So they're going to flex that marketing muscle. And the thing that I really love is that overseas, the growth of energy drinks and even hard seltzer is still catching up to where the U.S. is. So you have double-digit, more than 20% growth in some countries.
You know, Monster has a premium valuation in the stock market. The stock trades for about nearly 40 times this year's earnings. Coke and Pepsi are closer to 25 times. Is it worth that premium?
Yeah, on a forward 12-month basis, you're at roughly 33 times earnings. That's a huge premium, but the reason is because if you look at the growth of earnings and a little bit of margin expansion and share buybacks, you are talking about a stock that can continue to trade in the high 30s. I'm not looking for a 40 times multiple. I'm looking for the multiple to stay here and for earnings growth for, not just 3-4 years, many years to be maintained.
And, you know, it's ironic that at a time when the trend in beverages is toward healthier drinks, that this company sells a drink that's loaded with sugar, has 4 times the caffeine of a Coke, and it's so popular. Is there a risk there that the healthy trend might upend the Monster story?
So far, it has not. And the thing that I love, to be completely honest, is that you are talking about this can is 30 calories. It is, I was about to say it's really good. It's good. It's kind of weird tasting. But no, I'm not concerned. And if you look forward, you have years of growth that you've already had that you're going to continue to have.
So just curious, when you're looking at the beverage stocks, there seems to be a difference if you're in for Monster versus a Coca-Cola. What's the different investor profile there?
Yeah, they're completely different financial investments. When you buy Coke and Pepsi, you're buying diversified products, so you're getting watered down growth, not great growth, but you're getting very stable, defensive consumer staples companies. I don't look at Monster Beverage as a consumer staple company. I look at it as a growth company for the growth investor.
Do you think this company could be bought? You think Coke or Pepsi might buy them?
at a $60 billion market cap. Andrew, I have to be honest, I have not thought about that. Is it conceivable with a little bit of debt? Maybe. I hope not, because I think the Monster beverage management team can do a great job.
Well, they do have that distribution deal, though, with CocaCola that has made Coke talk about them a little bit as perhaps an acquirer. But I think you're right. Monster's getting a little too big at this point to be an easy acquisition.
All right, well, one of the things that you mentioned, Jacob, though, is how they are trying to branch out to other demographics. Looking around this table, I am the only woman on air. I am a coffee drinker. I am not a Monster drinker. So in the interest of journalism, I'll do a little taste test here with the original product, see if they have a shot. Bottoms up. That has a lot of flavors. And
what about the Bang? Because they just bought Bang, which is supposed to be more targeted towards women.
Carlton, you should add, you did not pre-taste this.
I did not pre-taste this. All right, again, interest of journalism, I am looking at the Sour Heads Bang, so this should be interesting. Let's go. Yeah, that is.
I think that says it all for you. It's very tart.
It is very tart. Thank you so much, Jacob.